For the moment, here's an important voice. I spoke with former Reserve Bank Governor Raghuram Rajan, and he likened the Reserve Bank to a seat belt. Just listening to what he had to say, we'll take a break and we'll come back with the pre-opening numbers.
If generally when there is a liquidity problem, the central banks try and solve that by putting liquidity into the market. That means lending against high-quality paper. That means lending to high-quality institutions so that they have the capacity to on-lend if there's necessity. If that is done, I think the central bank has primarily carried out its function. If there's further money needed because entities are severely undercapitalized, or because they have losses on their balance sheet, or because markets distrust them and refuse to lend to them, then we have something which is different from a liquidity problem. We really have something which looks much more like a solvency problem.
Okay.
In that case, I think much closer examination is needed of the particular issue. And certainly some of this can be remedied, as I said, by companies going out and issuing equity to bolster their balance sheets. If their market value is still significantly positive, it is possible. And if even the equity markets are close to them, then at that point, which is very far from where we are, a bailout could be contemplated. But that bailout has to be carried out by the government because ultimately taxpayer funds will be involved.
There is a severe disagreement between the government and the Reserve Bank on the liquidity issue for the following reason, that 11 banks have been put under prompt corrective action with three filters, either because their capital is not up to the Reserve Bank's requirements, or because they have higher net NPAs than 6%, which means they've not provided for their NPAs enough, or three, because they have negative ROA. Now, the government's position has been globally prompt corrective action is resorted to only with a capital filter, not with net NPAs and ROA filters. What would you say is the correct position?
Look, I don't, again, want to enter into the specifics of the debate. Let me tell you broadly that I think there is a little bit of a misunderstanding in this debate about what the RBI is supposed to do. I think the analogy, Dr. Viral Acharya gave the analogy of T20 versus test match. But let me give you another analogy. The RBI is something like a seatbelt. As a driver, the driver being the government, it has the possibility of not putting on its seatbelt. But of course, if you don't put on your seatbelt, you get into an accident. The accident can be quite severe. So most drivers listen to that annoying noise which comes when you don't put on your seatbelt and actually put on the seatbelt because they know it's for their own good. And historically, the relationship between the RBI and the government has been precisely this. The government wants to focus on improving growth, and it does all it can within the limits set by the RBI, which are set based on financial stability. So the government will try and get the RBI to be more lenient. And there were innumerable letters, both from industry as well as government, which came across my desk saying, please relax this, please relax that, please relax something else. And the understanding was we would examine that in close detail, see what the risks to financial stability were, and then say yes or no. When we said no, the government understood this crossed the Lakshman Rekha in some sense of stability, and that we would be held responsible. We have responsibility for financial stability, and therefore we have the authority to say no. They would respect that and come back the next day with another letter saying, what about this, what about that? And we'd keep examining all these possibilities. This has always been the relationship between the RBI and the government. And if you recall, I think there was this anecdote by Dr. Subbarao when he talked about this phone call between Dr. Reddy and Mr. Chidambaram. And he was listening to Dr. Reddy's side, and Dr. Reddy said, no, 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 and finally said yes. And he said, what were you saying? He said, well, Mr. Chidambaram was asking for this and that and something else. And I kept saying no. So why did you say yes? He asked me at the end if I could hear him. And I said yes. So, yes. That's the notion of the relationship between the RBI and the government. Of course, the RBI doesn't say no out of petulance. It says it because it has examined the situation and believes that this implies too much financial instability.
Okay.
I think that relationship has gone on for long, and you know, the fact that the RBI says no is not new. Now, the government can keep asking and say, please consider this, please consider that. But at some point it says, okay, I respect your decision. You are the financial stability regulator, and I back off.